Hey, good evening, guys. It is Coach here, Simon, with doing the trade review for. This is actually going back to Friday the 15th, and so it's currently Monday evening. Just want to kind of review what worked last week, and kind of give an outlook for which specific setups we're looking for next week, and also talk a little bit about emotional management, mental management, adjusting for the quickly changing range sizes. So I want to do all that, and I want to try to do it in under 10 minutes. Let's see if I can do that. So, first of all, you can see on uh, Friday morning, there we go, on Friday morning, we opened up, and we opened up, actually up is the wrong word, we opened down with a significant gap, right? We closed prior day approximately 1915, and we were opening approximately 1860. So that's already a significant push lower, right? 60s 40, 55 points down. Now, you got to remember, and I've spoke to a lot of people, guys, what works in a range of 10 to 20 points, you'll have to make some mental and emotional, and I do mean emotional adjustments to the market in order to be able to pull off some of these trades and have them work effectively. If you don't make the mental adjustments, you will have a very, very, very hard time making money in the market, right? And it's frustrating. Let's talk about it for a second. It's frustrating if what was working in 10 to 20 point ranges keeps blowing you out in um, in 40 to 60 point ranges. It's really easy to give back all the profits. My entire goal is to set myself up so that I both succeed, but that also primarily that I don't blow out my profits that I've earned prior, and hopefully also succeed. Now, for me, succeeding also means taking advantage of the much wider rotation sizes that are involved with a market like this. So the plan was initially, unless you are very, very aggressive, the plan initially in the room was to skip the first half hour. What's the reason for that? Well, you can see that we had this open drive higher, and it looks kind of small here, but if we actually put it to scale, right, we can see that we actually drove all the way from this point right here. Hopefully we can see the hand clearly, but from 1860 all the way up to 1880. One of the adjustments that we've made in the room is instead of focusing on 10-point rotations, is to work on 15 to 20, right? But make sure we have at least 10. And also sidestepping the first half hour. If you sidestep the first half hour, you miss this huge rotation up, and you also sidestep this huge rotation down. Now, let's talk about that for a second. To a lot of traders, that looks like, well, I should be able to capture that, right? The question is a question of risk reward and mentally being able to move quick enough. If you look at the rips here, you could have shorted 1875, had it roll all the way down to 1868, and in the same bar, almost whipped all the way back up, ripped up all the way back up to 1878, and eventually pushed 1880, right? So just by simply stepping out of this particular location, you could have avoided getting whipped. Now, as it was, I actually got a potential short signal here at 1873, 1875. I actually took it, but what my objective was, if you look on the prior day, we did not close at the lows, and my thought was that the market really wanted to come down and re-examine 1850, and if it got really crazy, possibly the prior year's low down at 1815. Of course, this is my supposition prior to the market being open, right? So then if you look, when we actually came up through here, I took a very aggressive trade in this 1872. And this is a great example of where things can go wrong. I actually could have taken this trade out at 1870 to 1869 for a 3 or 4 point profit. I chose to set through it. And that my stop, okay, so here's the other adjustment that I made that that most traders find very, very frustrating. I entered, I believe, right here is my original short entry. My stop was a full almost 10 points away, sitting up here. Okay. Now, some people will go, well, Simon, that's a big stop, right? But imagine this. Imagine you'd shorted here. Your target was to get down here to this 18, let's say this 1865 trade location. but you'd entered here and you simply used a 2 or even a 3-point stop. Well, this trader never makes it here, and this is one of the things that Dr. Brett Steenbarger was talking about in a post that he put up today and that I'd retweeted. If you look at my Twitter stream, you'll see it. But in it, he spoke specifically of the frustration of dealing with larger rotations and faster markets, and it just killing traders who do not adjust mentally and quickly enough. A 3-point stop here wipes this trader out versus a 10-point stop. Let me stay in. Now, I actually made some errors in here. When we got back to flat, I did not expect us to go to 1880, and I covered flat on this trade, I believe here, the first time in. And then when we broke down to 1868, 1866, that's what I expected. And one of the trades that I like to execute pretty often is using my 50-60 tool, and it did not work here. I gotta tell you, you got completely and solidly run over. Okay, and the reason why I got run over here a second time is I shorted in the right area, this 1872, but as it pushed down, okay, again, I was shooting for this 1850 level down here, and as it simply punched through, but then snapped all the way back. And again, this is another good example. I believe my entry was 1872.50. My stop again was 1882.50. And you can see here, there's two disciplines that were very, very important that I tried to demonstrate in the room, and I definitely demonstrated to myself, which was I've left my stop here, and again, I'm going to move this stop over so everyone can see where it was. All right, I'm sitting right over here. Wow, that's frustrating. Let's see if we can get this without it making it move. Apparently we cannot. We'll just draw another circle. The stop is still sitting right over here, right? And people ask, well, Simon, how can you sit with the stop when it gets so close? Two things came up from this stop, right? First one was, wow, you got run pretty hard 2 times. I was pretty sure I was going to get stopped here, but I am bound and determined when I trade to follow my plan, and that part of my plan is not moving my stops unless it's part of the plan, right? Once I'm profitable, I drag them down, but not moving my stop. I came within 2 ticks of getting stopped, but there's a flip side to that. Part of the reason the stop is so big is because the rotation size demands it. But secondly, the environment is such that we have the potential of getting down to this 1815. Part of the game plan was that I thought we'd get to 1815. I even thought we'd get to 1817 if it really got sloppy, right? I invested a lot of emotion in this area. I wasn't going to cover. And then someone asked me, actually it was Brian who was in the room, goes, Simon, why don't you cover now? You're flat on the trade. And I said, no. Why am I going to take all this risk, enter this trade, and try to capture a 5-point move, right? So I took this trade, and I was able to. I scaled some of it down here in this 1866, 1867 area, but I still had about, I think, half of it on at this point. And notice it still comes back up for one more trip back to 1875. Finally rolls over. One of the key factors on Friday, you'll notice in this area right here, right underneath here that I'm talking about. Notice how all of a sudden, look at the size of the rotations we're getting over here. Look how small the rotations get here. This really emboldens me. This point, the market's rolling over, right? I'm short from 1874. We're rolling over 1864. This emboldens me, and we shoot right for, and at 1852, I covered heavy. I think I actually have that posted on the Twitter stream that I have here. Let me see really quick if I can find that for everyone. And you can see right here, move this over, and I don't tweet all my entries or where I expect responsive buyers or responsive sellers, but you can see right here on January 15th at 9:36 a.m. That's California time, so that would have been 11:36 Central, 12:36 East Coast. That I said scale heavy, 1852.20, 20 points plus on that portion of the trade. Great day, stop at break even. So I scale very heavy. I left a very small trailer at that point. That's the private Twitter feed for the room, by the way. I just want to show that the trades aren't make believe; they really exist. I had a great day. I left my stop right down to break even, which was right back over here in this area. Now you can see at the end of the day we got caught back in. what I wanted to communicate here is I've done a couple things that are really important. I've adjusted to the volatility. I've adjusted to the rotation size, right? And I've kept flexible, right? I, even though I thought we could possibly go to 1817, I didn't force my hand. I left a small trailer for it. Also, the other part of it is emotional mental management. At this point, I really got worn out by getting squeezed hard 2 times, even though my stops didn't take an effect. And by the time we got down here, I was really done for the day. And one of the things that traders don't do, remember, trading is of such a nature where it's unlimited in nature. You can literally do everything or anything, right? You can trade this back and forth, short and long all day. You can try to grab little trades here. There's no bounds, both to the amount you trade or the number of hours available in the day to trade, right? And so if you're not willing to put a little bit of boundary around around what you trade, how you trade, and how many trades you're willing to take, you're just going to get worn out. At this point, I felt I could no longer make any good decisions. I did not make any additional trades besides taking the stop on the few contracts I had left at break even. But let's look at what happened here at balance of the day, right? We break down to new lows. Clearly, there's a panic, right? You can see the zones held, gave a rotation for 3 points off the front of this zone prior to breaking to the downside. We rotate all the way back up to the prior resistance point, reject out of it for 5 points. Then we come back in and we're now closed back in. And I pointed out, I came back in the afternoon and I said, unless we close below this 1866, right, buyers had it and there was no point even trying to fight for a short. And a general philosophy that I use is to not look to be short in the afternoon, particularly late in the day, in the hole, that it's just simply way too easy to get run over in general. So let's go over the concepts one more time in conclusion, and then take a quick look at the bigger picture, right? First of all, unless you're the most aggressive of traders, when the volatility is this high, you can afford to sidestep the first half hour. Now, I gotta tell you, when the range goes back to 8 to 10 points, you probably have to get pretty aggressive in the first half hour to 45 minutes to make any money. But right now, you don't have to because of the rotation size. This goes to the philosophy of understanding the environment you're in and adapting to it quickly, right? Number two, we knew that we were way deep in the hole, but that the reason or at least I thought I knew, that we had a pretty good shot at taking a punch to the downside. I don't think I covered this earlier, but if you look at prior day's close, right, if you look at the 50-60 retrace here, from prior day's close, pull that down, and you can see here's the 50-60 retrace sitting right up here at 1888 3/4. We were unable to hit that 50-60 retrace. What does that tell me immediately? Sellers are in control. If I stand aside the first half hour and I don't take any trades, that's very easy to see and then make the adjustment. Now I'm just looking for where are my opportunities to take trades. Next, I made a decision that I was pushing for that 1815, 1817. That means I purposely, even though I had a very good short right in here for 3 to 4 points, I chose to skip it. Know what plan you're on. Know whether you're trading for 2 points or 10 points. It really doesn't matter which one you're trading for, just so long as you stay consistent and true to what you choose, right? A lot of this is what I would refer to as psychological warfare on yourself, right? Don't go changing your mind constantly. Look at the trade, look at the setup, decide what your target is, and then stick with it. You'll be surprised how many times you can get it if you can actually identify, assuming you have some skill in identifying your proper trade setups. You'll be surprised how often you will hit those targets, right? And then lastly, of course, we ended up with a balanced day, and on a balanced day, the key thing that we want to look for is once we are trapped back in, which we did, we trapped right back at 1860 right here. Once we're trapped back into the range, look for it to travel to the other end of the range, and that's exactly what happened. Here's where the trap occurred, just after 12 o'clock Central Time, and by the end of the day, we traveled all the way back to the top of the range. And if I could have stayed fresh, I wasn't tired from the week, I imagine I could have traded this. This move to the downside was very satisfying. I nailed all my targets, and I recognized that I was exhausted. And I did exactly what Dr. Steenbarger would recommend, which is I realized the limitations of my own decision-making ability, and I stepped away from the trading desk at that point. So let's go and look at the bigger picture here real quick. So my bull-bear line tonight, and I posted this on StockTwits, is 1866 to 1868, roughly right there, right? And if you look at the price action right now, we're trading at 1883. We came right into that bull bear area right above 1870, and we've pushed up from there, right? And I think as long as we hold above this 1868 overnight, or trading above overnight, we have a good shot of pushing higher. The first test, right, will be trading above and holding above this 1877 level, which we're doing right now. We're trading at 1882, and if we can hold above the 1877, we have the open gap right here. And remember, it's very easy to trade in an unauctioned area, right? So the first hurdle really between here and here is this unauctioned area. It's going to be this 18. Let's see here. What's our 50/60? We're probably going to see responsive sellers. Right about this 1890 level. Right, that's a 62 retrace from the open gap to the swing low. Probably see responsive sellers first time in 1890, which remember, the market was closed today, and we already did get those responsive sellers right off that 1890 overnight. But as long as we get to that 1890, and then we can hold above on the backside swing above 1877 and 1867, those are two key areas, right? But we really, once we get up here, we like to see it hold above 1877. We probably, by sometime tomorrow, have a pretty good shot at 1913 on the upside. That's how I'm playing it. Now, the flip side is, if we come in here and we open up and hold below that 1867, I'm back to my bearish targets, which are a retest of Friday's low at 1850, and then 1815, 1817 is last year's low for the adjusted contract on ES, and that's what I'd be shooting for. So I hope that helps. That's what I'm looking for tonight. It's all in the setup, guys. It's managing emotions, both your emotional management, intellect management, how much energy you have to put into the trade, and putting your own boundaries into the market. But I do strongly believe that anyone can learn to trade profitably if they'll put the work into it, and they can put a few limitations on themselves so that they can trade in an environment that's helpful. And also, don't forget, the rules that you applied when we had a 10 and 20 point range in the day change when the 24-hour rotation is 30 to 60 points. Okay, and you have to adjust appropriately for that. Anyways, my name is Simon. I hope everyone has a wonderful evening. Hope everyone had a great MLK day, and I look forward to coming in and kicking a little bit ass. Tomorrow we're pushing the highs of Asia as I speak, 1883 and a quarter, and we actually had a pretty nice trade out of this 1870 area earlier this evening to push up into this 1883. We can get past 1890. I think we can get 1930, 1913, and that would probably exhaust it, right? That from where we closed, that'd be 75, 25, 35 points to the upside, and that would probably exhaust it unless we get some kind of news that really, really drives us, or there's a lot more bears than I think. So, and again, the only other piece that I'll really be focusing on this week is I'll be very cautious with shorts in the last hour. I just don't want to get run over in the afternoons on short squeezes. Anyways, guys, have a wonderful, wonderful day, and I look forward to helping out everyone in the room. Talk to y'all soon. Have a good night.